The next common question that I get typically from NRIs is about tax. So should I file my tax return? And what are the tax related things I should understand when I am an NRI? I can do about 10 different shots only on this particular topics. There are so much to cover. Let me give you a broad perspective on tax, and then let me talk about specific instances during case studies. The first thing that I would like to talk about is when you are an NRI, that means you are staying outside of India for 183 days in a financial year. Financial year typically starts from April 1st to March 31st of the following year. If you have stayed 183 days outside of India, you automatically become an NRI. Once you become an NRI, whatever the income that you are generating outside of India is not taxable in India. So that means the money that you're getting from United Arab Emirates, Abu Dhabi, or whatever country, you have to pay taxes. If at all, if there is any taxes in Americas or in Canada, you will be paying taxes over there, but you will not pay any tax for that foreign income. But having said that, even if you are an NRI, let's assume that you are getting more than 15 lakhs of rupees in India as a rental income or as an interest income or whatever. For the purpose of taxation, when you get more than 15 lakhs as interest income or dividend income, they say that you will be treated like a resident Indian, because 15 lakhs is not a small amount of money every year. So Indian Income Tax Act says that the moment you cross 15 lakhs, you better report the tax structure as a resident Indian. So my suggestion is that you should reach out to people I'm a cost accountant by myself. So you should reach out to either chartered accountant or to cost accountant or to tax consultant and understand your situation if it is more than 15 lakhs. Similarly, as an NRI, typically what happens is Government of India tries to collect tax collected at source or taxes deducted at source. For example, whenever there is a real estate transaction happens, during that real estate transaction, they try to either take 20% TDS, or when you buy big real estate, they'll ask you to submit surrender about 1% TCS as well. So my suggestion is that every year, please log on to the income tax portal, and right now as of today you have something called AIS, Annual Information Statement, Tax Information Summary, and Form 26AS as of today. So go through all these three documents. If there is a TDS that has been deducted against your PAN, our strong recommendation is you file income tax returns year on year. And also it's very important that you should implement or you should understand the FEMA rules, FEMA. So we'll talk about it more in the future videos, or a separate set of 10 videos with 10 different case studies on taxation alone.